Oof, we were talking about short squeezes last week and the week before that, but we didn't think it would happen this fast. And we're seeing a lot of FOMO go back into the market, which is great. This is like the third day in the last week where small caps really broke ahead of the pack. In fact, the Dow Jones was down today and the S&P was basically flat. But small caps, oof. Take a look at the ARK flagship ETF. We're very, very close to breaking above where we made it last time innovative tech bounced in March and mid-April. If we break above this again, which could certainly happen this week, you're going to have a ton of short sellers sweating bullets, folks. But of course, a warning to you, if you feel too smart during green days, you're going to feel really stupid during red days. So as always, let's just dedicate our process instead of letting ourselves feed off our emotions. And so in this video, we must be talking violently about our plays, what the best opportunities are, and of course, what's happening. But first, of course, the only thing I ask of you in return for this video is that you hit that ravishing like button and also don't forget to subscribe. Okay, I want to start with skills. So our skills play just totally wild, up another 16% today. It started with a short squeeze last week, but it's quickly turned into this massive rally. If you look at it, it's almost doubled in the last week. But let's be real here, you don't want to get too far into these extremes. In ZipTrader U and on the public channel, I've been talking about skills as being worth about 30 bucks. The reason I didn't like it when it was higher than 30 bucks is because there's just too much risk for it to be over 30 bucks. In fact, I didn't even start liking this until 18. But even at this price, Skills has a lot of room to get to 30 bucks. I love their business model. We've talked about how they brought a completely different monetization model to gaming that rewards both creators and gamers. And despite short sellers pushing the agenda that Skills has a dumb business model specifically because it's new and anything new is bad, well, it seems like the membership numbers don't reflect that, do they? And it seems like NFL must have missed the memo that this is a dumb business model when they signed that multi-year contract a few months ago. Obviously, the goal of short sellers isn't to get it right, it's to convince other people that they got it right, and that's why short sellers are so successful, because other people are so weak-willed. It's easy to force someone to sell something. When someone buys a stock that they don't know what the heck they're buying, just put out a little piece of bad news and they're all of a sudden like, oh my god, it was a scam! And then the stock price goes down and then the hedge funds make all their money and then you have a whole new class of people coming in and doing the same thing. I joke, but it's really sad. The thing is, never has it been so easy for funds to make tons of money off people because there's just so many buyers that don't know what they're doing. There's so many buyers that'll buy something and whatever the media says, they'll just do it. And it's ridiculous and it's sad, but there's nothing that we can do about it and it'll keep happening and no one will learn. But it's okay. Anyways, though, I'm very bullish on Skills. This short squeeze has been extremely rewarding for many people, but at the same time, keep a reasonable picture here. It may take longer to get to 30 than it did to 21. Okay, Microvision MVIS, another insane day for them. They've tripled in the last 3 trading days. I was certainly late to the game on this one with a briefing for the first time just today in the high $19 range, but even that being said, it still ran to 27.8, which we briefed on it in the $19 range. Talk about having some gasoline in the tank. But the reason that we briefed on this though was because this was the latest hot hype play that was running up on social media exposure, and it's quickly become the most mentioned stock on Wall Street Bets, which means it's getting that temporary GameStop boost. And the reason that they are targeting it, in my opinion at least, is because the stock has a 20% short flow. Wall Street Bets likes to gang on stocks that have a lot of short sellers in them because it forces those short squeezes, and you see that pretty much across the market, but especially with the ones that Wall Street Bets is targeting. But keep in mind, folks, this isn't going to sustain itself forever. I would treat these as day trade opportunities, and we will likely get several more day trading opportunities out of MVIS in the upcoming weeks. We've also really been hammering green tech and especially Chargepoint. Chargepoint has continued its solid uptrend. It's gone from 19 to 26 in a very short time period, and depending on your average price acquisition, you can see how important it is to get good deals when they are in that good deal range. Obviously, part of that is capital management. How much capital do you have left to buy dips when they come? Another part of it is like when you have a long period of dipping, which we just had, it's kind of hard to get behind just constantly buying the dip. I mean, we all get pretty sick of the same thing, but you want to make sure that you get good deals so that you can ride your high conviction plays up to their fair value. Okay, CCIV is up 16% today. There's speculation that there's some partnership that they're going to be having with Apple. These have been circulating after reports showed that Apple and Lucid are likely to share a similar manufacturer, Magna International, and while neither company has confirmed that suspicion, Johnny Ive of Apple fame, he was the big designer behind pretty much all of Apple's main products. He is on the operating board of CCIV. And that's creating the idea of a partnership and fueling that rumor mill. But I don't know about that, folks. I think that Lucid and Apple would be better off just building their own brand name. I mean, it probably would be better for Lucid to attach to Apple, but if I was Apple, I don't know that I would partner with Lucid. Maybe they're going to collaborate on software or infrastructure or even battery technology. I could see them partnering on some of the smaller, more versatile aspects of the business. But in terms of like a massive partnership, I don't know if I see that happening. But hey, I hope it happens. That'd be great for CCIV. Nonetheless, either way, CCIV is a good deal in my opinion. Big reason that it's trading this cheaply is because of the recent fear over SPACs. The idea is that if you have an SPAC, it doesn't matter what company you're taking public, that's a speculative asset. Way too speculative. If I was CCIV merging with Lucid, what are you getting? You're getting an EV company that actually has a set production timeline, reservations to boot, and infrastructure to make it happen. So I would say at these prices, CCIV is very, very competitive. Vuzix, always quite the doozy. I want to give some updated guidance on this one. This is one that we've had a rinse and repeat play many times. With Vuzix going from oversold to overbought over and over again. And shout out to folks who benefited from the last bounce to just under 26 bucks. But here's the thing, patterns, they tend to repeat themselves, but they don't have to. So if you don't feel like you have the stomach this time to hold to new highs, that's fine. Go ahead and take some profits off the table. Obviously, we still have some FUD in the market and the trend hasn't really been completely broken. So if you don't think that you're going to have the stomach to hold until that gets back to that $30 range or above the previous high, I would say take some profits off the table. You already had a good trade. You did well. Take some profits. Okay, OCGN was a briefing play that we talked about quite a bit last week, and it continued providing some opportunities to trade off of this morning, and this was on news that their partner is going to be charging twice as much, that's dos as much, as the main Indian rival. And this is at the same time when COVID cases in India are at like huge highs, unfortunately. Look at the chart of India COVID cases. It's like insane. There's going to be a lot of companies coming out of the woodworks and trying to meet that demand. The government under there is under a lot of pressure, and while they have been trying to censor some of that pressure, they're going to be throwing money at a lot of companies and a lot of American companies trying to meet that demand to stem the virus. So be on the lookout for plays like OCGN. They're going to keep providing opportunities, but make sure to keep your entries short term. Okay, Mara, lovely Mara, and Riot. Over the weekend, I was really expecting Bitcoin to find its resilience at about 45,000 a coin. Talked about that on Friday, but it actually found resilience faster than I thought. It hit it at like 47,000 and then bounced all the way back to the 53, 54 range. It's become increasingly difficult for Bitcoin to really be bludgeoned because it has a ton of institutional adoption support in the 40s. So for someone to sell deep into the 40s, they have to be thinking, wait a second, I'm betting against the big money. And when you have prominent companies like JP Morgan targeting wealthy clients with Bitcoin funds, it creates a lot of authority for the asset class. And I think a lot of people don't want to mess with this. So thus we saw Mara and Riot up today. To be honest though, I would say don't get too worried or excited about Mara or Riot. When you're buying a crypto exposure play, you expect a wild ride. So honestly, it's not good for your sanity to be like, oh my God, Mara's down, Mara's up, Mara's down. I would say look bigger picture. Where do you see Bitcoin going throughout this year and throughout next year? Well, Mara and Riot and probably Bitcoin itself are probably going to be factoring that in ahead of time. Okay, one of the other plays that found itself on our briefings over the last couple of trading days and in our comment sections quite a lot is BNGO. Now, BNGO is definitely more on the speculative side, and it has been a complete disaster as people haven't wanted to buy speculative asset classes. However, this was a play that was pushed too far down and too quickly, and that's why in the last few trading days it's been up so much, like 50%. But it's also because investors are being more willing to take the chance on this play amongst a new UK deal, ambitious research publications, and high price targets from usually sleepy analysts. Again, BNGO is certainly on the more speculative side, and there's questions as to whether their main product will even make it through the FDA process, but there's a lot of room for improvement here, and I think that the market has beat it down far too low. That being said, I'm not super excited about the immediate future for BNGO. I think maybe you get a couple more days of short squeezing in the next week, and then you see some cooling off. I think that likely BNGO is going to need a bigger catalyst to really sustain an uptrend. Okay, lastly, what happened with Tesla? So Tesla actually did a pretty damn good job on earnings. They said they were able to navigate through the global chip supply shortage issues by pivoting extremely quickly to new microcontrollers while simultaneously developing firmware for new chips made by new suppliers. This is kind of what we were talking about yesterday. They have a very long history of dealing with supply chain issues. They're able to pivot very quickly, and they have priority relationships with a lot of suppliers. And they also do a lot of things in-house. So they've been in a very special spot in terms of dealing with this chip shortage. They also said their average sale price fell as their higher margin Model S and Model X are pending refreshes. Revenue for regulatory credits was also a big deal that they reported. We talked about all of that yesterday, so pretty much no surprise there. Overall, they posted record net income and their revenue surged by 74%. Very, very exciting, good numbers. Stock price overall pretty flat. Usually speaking, Tesla likes to pre-anticipatory run, so we saw a little bit of flatness after hours, a little bit down. One thing I will add is the fact that Tesla was able to pivot so quickly during this EV chip shortage means a lot. It means that they now have a new edge on companies that weren't able to pivot, many in both the gasoline and electric sectors. And it also puts a lot more pressure on companies like NIO, who are also going to be expected to be able to pivot as well. And we're going to be looking to see what they say on Thursday on their earnings. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you're looking to learn how to trade with like access to our private chat and daily morning briefings, I'll put the link to ZipTrader U below. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to Webull. Put the link below, but they are a great platform and I think they're worth checking out. Anyways, folks, have a great day and I'll see you in the next video.